All right, welcome everybody. Doug McKay on the 22nd of June. Another week flew by. Anti-WallStreetGuy.com. Looking at a chart, as always, we start out for the most part with the S&P 500 cash. This is a daily chart. We'll remove some of these notes from a couple weeks ago. Pretty short video tonight. We have the overall trend for the second week in a row as neutral to bullish, which is neutral to long, cautiously bullish, which means we have cash as our biggest position, but we are more long than we are short. This could just be a normal retracement. Pretty much every week we put up a chart, either a still chart or a in video format or both, where once a position breaks out, typically it will come back and test its most recent breakout area. Yesterday it did it and it surpassed it on an increase in volume. Therefore, that is the reason we are somewhat cautious here. We are below the 50-day moving average. The S&P, you cannot see it on this free stock charts, but it did just catch or stop at the 30-day moving average yesterday. So I think if the 50 crosses the 30, we're going to take out these lows, and maybe we'll fill some of this open space down here, and possibly you can't see it on this chart, but on the SPY, there's a gap down here. But again, for the record, more long than short. If it's a decent week next week and we clear some of this resistance here, then we'll let any hedge go and get more aggressive. If we get above here, I believe at that point we'd be 100% invested, thinking that we're going to challenge these highs that were put in earlier this year, or in the earlier in the spring. All right, so that's that. Let's take a look at, let's do something a little different. Take a look at short treasuries, TBT. This is a chart that we're keeping an eye on. Possibly we're going to fill this gap. Decent day today, especially if we get above 16 here. And I like this, even though it is double, meaning ultra. We can do this with within our risk parameters, even though it's an ultra ETF. If we look at the flip side of that, we'll pull up the IEF and the TLT. You can see here that if we were to draw in support here, you're only going to hit support so many times, just like resistance, and you're going to go through it. Usually if you hit it more than 3 times, the odds are you're going to bust through it. So this, again, long term, for the longest time, that the trend has been long, looking at a weekly and a monthly chart, but I think this is a potential trade here to get short treasuries. Let's take a look at gold. Everything got a bounce today, commodity driven for the most part, gold being one of those. But gold, and we never really, remember we said last week and several weeks before that, is we thought there were better places to fish, because anything, I mean, gold could be up $100 next week, it could be down 50. Still in this tight trading range. Again, very similar to crude. You're only going to hit support so many times and you're going to break through it, but there could be a bounce play here, possibly up into resistance. But again, this would just be for a trade. Let's take a look at oil. Same thing. This is just something I would stay away from unless you're just looking at this for a short-term bounce, maybe up into resistance. And what else did I have on here? Let's take a look at IYT, the transports. Some of the managed accounts, we had this in earlier in the week. I'm thinking we probably picked it up here intraday. Big move this day. What day was that? That was Monday. And that was a big week. We dumped it, I believe. I had it up last night around 92.55. And amazingly, this was actually without the big move today in equities. This would have even been lower, but this continued to go down today. So again, anything that's this beat up, you have to be careful, because I believe it's a potential shorting opportunity. If we go back to the S&P 500, even though we have the overall trend as neutral to long, which is cautiously bullish, this could be a shorting opportunity here. We could look at this chart and say, okay, it came back, tested and held resistance or support. Now it's heading up again. That would be the bullish outlook. But at the same time, you could walk out the door, come back in, and make a case for a bearish scenario here, where we came down hard on higher volume. This could possibly be a dead cat bounce, get short into the 50-day moving average if it hits it, which I think it will. And that is also resistance here, as you can see on these candles, and get short. And that may end up being what transpires. So the bottom line is, if the trend breaks, we'll be out. We'll let the short run. And if the trend continues, what we will do is let go of the short hedge. Again, we're more long than short. And then we'll get aggressive on the long side, especially if we clear this resistance here. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com, short video. Enjoy your weekend. We'll see you next week on the blog. Thanks.